Welcome everyone. In this video, can Xcn coin make another explosion? We will analyze and comment on it. Don't forget to subscribe and like, and please watch to the end to understand. Looking at the chart, there is a prominent area where price action has shown significant reactions in the past. I've marked this area with a green box on the chart, and it shows us that price has been operating as a strong support area, both historically and technically. Previously, when the price has approached or touched this area, we can clearly observe that buyers have become dominant. The sell-off has paused, and the price has started to rebound by reacting upwards from here. This reveals that this level is considered a strong demand zone by investors and serves as a psychological threshold in technical terms. Such support areas should be carefully monitored not only for their past reactions, but also for the role they may play in the future. Although the price is currently slightly away from this support level, in the event of a possible pullback, if the price reaches this area again, the possibility of producing a similar reaction is quite strong, because such areas are what investors consider as safe entry areas. Especially if there has been a strong rally after the previous reaction, it is likely that pending buy orders in this area will be reactivated. This support box is also a good example of what is called a reaction zone in technical analysis. That is, one of the areas where the price has exhibited a certain pattern of behavior in previous contacts, and this behavior tends to repeat. Such areas are among the strategic points that traders and algorithms take into account and make trading decisions. Therefore, when the price approaches this box again, it generates a signal that should be carefully monitored, especially for short and medium-term investors. Another important detail to keep in mind here is that support levels always work strong at first contacts, but may weaken over time. So if the price has touched this area several times before and has bounced upwards each time, the strength of this level is technically eroded a bit more with each new contact. However, this box area we are analyzing still seems to retain the potential for a sharp reversal from the initial reactions. This suggests that if the price reaches this level again, it is highly likely that buyers will re-engage and an upside reaction may occur. If the price weakens in the coming days and comes back to this support area, the price behavior here will tell us a lot. If it bounces strongly off the support, we would confirm that this area is still a valid and strong buying zone. But if it closes below support, then the possibility of a deeper correction may come into play. So let's look at other metrics so that the analysis is clear. Stay tuned. And it's clear that price action has been tightening within a pattern of late. In particular, the candlesticks have been moving in narrower ranges over time, indicating a buildup of uncertainty and energy on the part of both buyers and sellers. The pattern that can be clearly identified technically within this structure is a classic descending triangle pattern. This technical structure refers to a situation where prices make progressively lower highs but pause at a horizontal support level. In other words, traders consider every rise as a selling opportunity, while the support line at the same level is not enough to push the price down further. This indicates an intense struggle between buyers and sellers. In particular, such patterns signal that price action is approaching a turning point, and depending on the direction of the breakout, there could be very sharp movements. Descending triangle patterns theoretically have the potential to break to the downside most of the time. However, it is important to note that it is not only the type of pattern that determines the breakout direction, but also whether it is supported by current market sentiment, trading volume, volume profile, and macro factors. Looking at the current structure, one can also observe that the price has touched this falling trend line many times, each time generating selling pressure from sellers, but weakening over time. In technical analysis, such frequent contacts cause the trend line to erode and lose its psychological resistance power. In other words, each new contact increases the probability of breaking the trend one step further. At the same time, the price's reaction to the support line is also important. If the price bounces up from the same level each time and heads towards the resistance line with a slightly stronger momentum, this indicates that buyers are determined and starting to strengthen. Especially when recent candlestick patterns are analyzed, the formation of green candles with a body supports the increase in upward demand. In this case, the upper edge of the triangle, the falling resistance line, has now become a critical boundary. If the price manages to break this boundary with high trading volume, a very sharp and sudden upward movement may begin. Such breakouts are often not only short-term, but can also be the beginning of a medium to long-term trend. The increase in trading volume at the time of the breakout is particularly critical. If there is above-average volume during this breakout, this indicates that the breakout may be healthy and permanent. Such technical breakouts usually attract the attention of market players, and traders who receive technical signals start opening positions. As a result, buying pressure increases further, and an upward move up to the breakout length of the pattern, that is the widest part of the triangle, can be expected. If this move is supported by buying from the breakout zone after the resistance line breaks upwards, it is quite possible that the price will reach the target zone quickly. On the other hand, one should always consider the opposite scenario in such patterns. If the price breaks the support level at the lower edge of the triangle, and this breakout occurs on strong volume, then the bearish scenario is valid, and the price may go as low as the height of the pattern. However, looking at the current chart structure, the fact that the recent waves contain upward pressure and the resistance line has been tested repeatedly makes the possibility of an upside breakout stronger. As a result, this descending triangle pattern is not just a technical structure, but also a warning that the market is entering a squeeze and may soon make a strong directional move. The direction in which the pattern breaks will create a new wave of momentum in the market. For this reason, it is of great importance to follow this structure carefully and to build trading strategies in line with this breakout. It is useful to follow. When we take a closer look at the Bollinger Bands, which are among the technical indicators on the chart, it is noticeable that the bands are getting narrower. This kind of narrowing indicates that price movements have been relatively calm and flat for some time, volatility has fallen, and the market has entered a certain tightening phase. Due to the nature of the Bollinger Bands, the bands are drawn on the standard deviation of the price, so during periods of reduced volatility, they converge and present the appearance of a contraction. This is a classic sign of a squeeze-bust cycle in technical analysis. Such periods of contraction are often like the calm before a storm. The market can't stay stuck for long because the price, after being in a narrow range for a certain period of time, wants to release this energy in one direction or another. This is often a precursor to a strong breakout, especially during this period, when the distance between the upper and lower lines of the Bollinger Bands shrinks over time. Traders start to strictly monitor price movements. Because when historical data is analyzed, a sudden, sharp, and directional price movement usually occurred immediately after the periods when the Bollinger Bands were so tight. Also, when we look at areas that have experienced similar Bollinger Band contractions in the past, we can clearly see that these contractions are often followed by a sudden and voluminous price action. Therefore, it is possible that the breakout following the current squeeze will not only be limited to a short-term move, but may also trigger the start of a larger trend. Especially in an asset that has been stuck in a sideways market for a long time, such moves can bring new waves of buying or selling. As a result, a narrowing of the Bollinger Bands is a warning in terms of technical analysis. Following this squeeze, a sharp reversal of direction can be expected in the near future. Being on the alert ahead of such breakouts is a great advantage in terms of identifying the direction and taking a position. The current outlook suggests that we are on the verge of this breakout. Therefore, it should be carefully monitored along with other technical signals, and a strategic preparation should be made. The Bollinger Band has exploded in a very big way when it has narrowed like this before. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.